My name is Carole Foos. I'm a partner at OJM Group, and I'm one of the authors of the Multimedia Playbook. I especially participated in the tax section of that playbook. And now that we're coming up on 1 year since the book has been published, we wanted to provide an update on the tax section. So thank you for clicking on this link and watching the video. As we sit here in May of 2025, we're very much in a state of flux in terms of what kind of tax planning should we be doing. In all likelihood, the Trump administration will pass a tax bill of some sort this year in 2025. All indications are certainly that they're working toward that, and that's one of their goals. And frankly, even if no law is passed this year, tax laws will change effective January 1st, 2026, because that's the date that all of the temporary provisions that came about in the Tax Cuts and Jobs Act that was passed in Trump's first term are set to expire. So just want to bring everyone up to date and talk about that a little bit. First off, if no legislation is passed, then on January 1st, 2026, we're going to go back to slightly higher individual income tax rates. That top tax rate will go back up from 37% to 39.6%. Standard deduction will go back down about in half. So that's important to note. The limitation on state and local income taxes that's currently set at $10,000 as the most state and local income and property taxes that you can take as an itemized deduction, that would go away on January 1st, 2026 if no law is passed. Again, highly unlikely that that's what we're going to see. What we do know is as Congress is working on tax legislation that President Trump would like to see on his desk this year, budget reconciliation, which is a term you read about a lot in the papers, it gets talked about a lot on the news, that was passed all the way back in 1974, and it allows legislation to pass in the Senate with 51 votes versus 60 votes. So again, that makes a bill much more likely to pass this year with the control of Congress that the Republicans have in both houses. What we're reading and what we're hearing in terms of what is likely to pass, and again, this is all conjecture, right? We're basing it on what President Trump has said in his campaign, what he and members of his administration and members of Congress have talked about since his inauguration. But in all likelihood, what we might see is an extension of those Tax Cuts and Jobs Act, or TCJA, lower individual rates, meaning they would continue to be the current brackets and indexed for inflation each year, but where the top individual rate is 37%, we would continue to see that higher standard deduction, which, as we've seen over the past several years, means more and more people are taking the standard deduction versus itemizing. The administration seems to be in favor of returning to a situation where we have full bonus depreciation deductions allowed, more favorable interest deductions under Section 163J. Those are currently limited. So for companies that take on a lot of debt, and are paying interest on that debt, many at the time they've taken that debt on don't realize that there is some limitation related to their EBIT in terms of what portion of their interest expense they can deduct. So we might see that become more favorable as a deduction. In addition, they've talked about repealing the amortization requirements for research and development credits or research and development deductions. So we might see that. There's a lot of talk about relief from that $10,000 SALT or state and local tax cap. What is likely is it's most likely not going back to a full deduction of being able to deduct all of your state and local income and property taxes. However, There's been some talk about, currently it's a $10,000 limit. Maybe married filing joint limit would be higher than single taxpayers. Maybe everyone's limit would go up. So we'll see what happens with that. They're also talking about some repeals and revisions of the energy credits, which again, lessening the credits would help pay for the tax bill. And President Trump has certainly expressed interest in getting rid of tax on tips and overtime. So we'll see if that gets included in the bill at all, or for certain taxpayers, certain taxable income levels or modified adjusted gross income levels. The key point that I want to get across to you is certainly keep checking our website. If tax legislation passed, we will certainly be putting together some articles. We'll be updating the videos for this playbook. We'll likely be doing webinars to explain the impact of any new tax legislation that passes. But we want to keep you informed. And just know for right now, we are in a little bit of a state of flux on income tax planning. But we do expect there's a likelihood that rates for individuals will stay where they are. At least that seems to be the goal of the administration. Thanks again for listening. Thanks for reading our playbook and listening to our videos. And certainly feel free to give us a call at OJM Group or reach out to us via the website if you have any questions regarding this. Thanks.